today's morning conversation with central bank governors on monetary policies and financial policies. All of our sessions have simultaneous interpretation in both English and Spanish. For those who are attending in person, devices are located at the entrance of the room. Let's begin with our moderator, Marta Ruiz Aranz, IDB Regional Economic Advisor, with the welcoming remarks for this panel. Buenos días a todos. Bienvenidos a nuestra sesión de hoy, una conversación con bancos centrales en políticas monetarias y financieras. Recuerde que todas nuestras sesiones tienen traducción simultánea al inglés y al español. Para los que se encuentran en la sala, los aparatos están localizados a la entrada del salón. Demos inicio a nuestra sesión con la moderadora del día, Marta Ruiz Aranz, asesora económica regional del BID, con las palabras de bienvenida para este panel. Bienvenida, Marta, muchas gracias.
Muy buenos días, muchas gracias a todos. Bienvenidos a la reunión número 58 de la Red de Bancos Centrales y Ministerios de Finanzas del Banco Interamericano de Desarrollo. Mi nombre es Marta Ruiz, soy asesora económica aquí en el BID y tengo el placer de moderar esta sesión, una conversación con presidentes de bancos centrales, donde vamos a profundizar un poquito más sobre las perspectivas y desafíos en materia de política monetaria y financiera. Me acompaña un distinguido panel, tanto en la sede como de forma virtual, y me complace dar la bienvenida al señor Roger Madrigal, presidente del Banco Central de Costa Rica. Bienvenido, buenos días. Al señor Julio Velarde, presidente del Banco Central de Reserva del Perú. Buenos días, bienvenido. Al señor Alvin Hiller, Governor of Trinidad and Tobago, the Central Bank of Trinidad and Tobago. Good morning, welcome. Y al señor Diego Labat, gobernador del Banco Central de Uruguay. Muy buenos días a los cuatro y muchísimas gracias por aceptar la invitación del Banco Interamericano y acompañarnos el día de hoy. Cada uno de ustedes tendrá 10 minutos para hacer una presentación, explicarnos, contarnos sus reflexiones sobre la política monetaria y financiera desde la perspectiva de sus países, y a continuación daremos paso a una sesión de preguntas y respuestas donde elaboraremos un poquito más sobre esos desafíos globales de los que hablábamos ayer. Entonces, sin más preámbulo, le doy la palabra al gobernador Roger Madrigal. Él tiene una presentación. Entonces, adelante, por favor, muchísimas gracias.
Muchas gracias. Son 45 filipinas, entonces. No, mucho menos, obviamente. Muchas gracias por invitar al Banco Central. Siempre es una buena oportunidad para dar a conocer lo que hacemos y luego retroalimentarnos, de saber qué dicen otros de lo que hacemos y qué podemos mejorar.
What others are saying about what we're doing and if we can improve. Now, we are a small, open economy, 5.2 million population per capita, $10,000 per annum. How would we characterize our situation in Costa Rica? Let's see, I have a slight problem. Maybe I can go back. Costa Rica has an inflation target. I'm not going through the mechanism, but we do have 3% inflation. We have monetary policy in the liquidity market, and the interest rate affects the other interest rates that are part of financial statements, and that affects aggregate demand. There are other policy instruments, like, for example, our reserve requirements, and also active participation in the debt market. The central bank has a high that
lo
are
que nosotros
evidence-based.
quisiéramos anunciar también que la pasiva sí, obviamente
Now,
del sistema financiero,
the
si
borrowing
reduce la tasa,
rate
les reduce
has
costos.
gone
Muy
down.
probablemente lo que está ocurriendo
Now,
es que los márgenes
basically what
de
we
intermediación en
see
Costa Rica
is
estén
the
aumentando.
spreads in Costa
Nosotros
Rica
calculamos
are
algo que se
going
llama
up.
el premio
We
por ahorrar, no
calculate
invertir. La
something
gente
that
dice
we call
invertir,
savings
pero es un error
premium.
conceptual, es ahorrar.
The whole
El premio por
concept of
ahorrar en colones.
savings in
ese-
colones. Here you can see the rate in colones compared to the US dollar rate. It is a compound rate, and right now that value is negative. We feel that, and this is something that we often discuss with people doing research, but we don't know if we're in a zone where there is a difference, and it seems that there is greater space. Something else that is important to Costa Rica is buying reserves. In June, July, we have 11 billion in reserves. In January, we replaced $1.2 billion. So this affects international reserves. But since we have had to buy reserves, we have done that with colones, and that has increased the amount of money in circulation. We have to do our monetary policy, and here in light blue, you can see the excess liquidity in the monetary market right now. Now, I was talking about the exchange rate. I hope you'll ask me about that, but there's been an appreciation of the exchange rate, something like 6%, 16%. What has been accumulated in the year in terms of reserves, we have 13.2. It's neither high nor low for a Latin American country. I know there are countries like Guatemala, Dominican Republic that have more. I don't know about Peru, but that is something that we'll look forward to hearing from Julio about. And then the metrics of international reserves, we are 124. Over the next few days, it will probably go up because of the influx of dollars. Now, as far as inflation is concerned, there was a report on monetary policy that we made about a week ago. We reviewed the growth for 2023. We hope it will be 5.3%. And there, the probability is to the upside. The upside risks are greater than the downside risk, and we think that it will be close to 3% as of the third quarter of 2024, which is when we will be very close to our target value. So basically, that is what I can report on Costa Rica. Thank you. We're going to continue with some of the issues that you brought up. And now I wanted to call on Julio Velarde, who is from the Central Bank of Peru. He is its president.
No le escuchamos.
Me habían cortado.
Ahora mejor.
I think I'm back. Can you hear me? Yes. I would like to summarize what is happening here, just like Roger did. Can you hear me fine? In our case, inflation started to climb in July of 2021. We went higher than 3%, which is higher than our target, and we began to see changes in August. We believe that these changes were going to be temporary. Our starting level was lower than other countries. We're at 0 or 0.25. So perhaps we had more leeway than other countries. We were at 25 basis points originally and then went up to 50 every month. And in January of this year, we had the last increase, and then we had a long pause until September. Then there was another 25 basis point reduction and yet another in October. We may have another reduction after our policy meeting tomorrow. The rate is at 7.25. I would also like to mention that the mid-size and large countries, that we were the only one who did not reach double-digit numbers, so it means that we must have done something right in our economy. It may be due to the fact that our interest rates never reached the two-digit level as it did in other countries. For example, Mexico was also at 8.9, so it was not a double-digit level, but in other words, our rate was not all that high, and now it's coming down. Inflation started to decline, but unfortunately, it's been the longest period where we've been off our inflation targets since we've had targets, and that was early in this century. So we've had a long period with off-target inflation, and that makes us think of potential consequences, especially in the event of additional shocks. So inflation has been on a downturn. For 2 months, it's at 2.3. Inflation to October, it's at 3%. We expect it to be at 0.2 monthly in November and December, and ending at 3.5 for the year. So now we are within our target range, or we hope to be in our target range, but March, April next year, barring a strong El Nino, which could have an impact on pricing. Core inflation is under control. We are expecting it to be within the range for this year, so at 2.9 or 3 by year end. And contrary to other countries of the region where headline inflation has decreased faster than core inflation has still been lower, especially because recent inflationary shocks have been due to climate factors and to an health-related situation, but we've had a drop in prices, and now we are coming back to normal levels. I think that's basically what I would have to say. We've estimated that the neutral rate, which used to be 1.5, may come closer to 2%. And what worries us for next year are two things which could have a bearing on inflation. One is what I already mentioned, climate-related factors, which may have an impact on the first quarter and on food prices. And the other thing is the volatility we're seeing in financial markets. Even though in the past we have had periods with rates below the Fed rates, we have taken steps proceeding with caution. We'll see what happens with the Fed. We'll see what happens by May. We expect changes in June, July, but it depends on how economic activity evolves and what happens with U.S. inflation. So that is what I wanted to mention. Our economy continues to grow. Credit remains stable. Companies are paying for the relief they received during the pandemic. We currently have a recession in the country, but due to other factors. There's been some monetary policy issues, some political instability, and again, climate-related factors have had a strong impact. The government was elected in 2021. We had 8% of GDP, and that has left scars, which will take time to heal. So economic activity remains low. Interest rates will be a key factor. Mortgage rates are linked to 10-year bond rates more than short-term rates. And interest rates on U.S. Treasury bonds has had an impact, I would say, around the world. And that's it. I will be available for questions. Thank you very much, Governor, for sharing your thoughts, and we will come back to you during the question and answer period.
Yes, thank you very much. I'm excited to be here, and thanks for the invitation. I'm hoping to be able to share our experience in Trinidad and Tobago and the rest of the Caribbean, and to learn from our brothers and sisters in the rest of Latin America. So let me start with the background of the Caribbean in the pandemic. We have a situation where the pandemic hit the Caribbean very hard. Most of the countries are tourism dependent, and tourism stopped. You had lockdowns, you had a lot of restriction of activity, and this is something that the countries had to deal with. The fact is that most of us, most of the Caribbean countries started off with not a good position. High debt, very little fiscal space, and so forth. In Trinidad and Tobago, we, however, had larger buffers at the Heritage and Stabilization Fund, our sovereign wealth fund, and we had high reserves and some fiscal space. But this was quite important for the Caribbean. Now, what happened? We also had inflation that is going up according to everything that we've been talking about. In the rest of the world, the inflation went up and then it came down. Monetary policy in Trinidad and Tobago, as well as the rest of the Caribbean, was actually quite straightforward. In Trinidad and Tobago, we reduced our reserve requirement from 17 to 14% and reduced our policy rate from 5% to 3.5%. And we kept it there for quite some time. The focus was more on prudential matters, trying to get the banks to provide credit, and so reducing some of the barriers to credit quality. What were the results of this thing for the Caribbean? Inflation, as you know, went up, and then it came down in tandem with the rest of the world. Most of the countries are recovering quite well. Tourism has been picking up. Guyana is an outlier because Guyana has a huge windfall now from its investment in energy. In Trinidad and Tobago, the economy has started to recover, but is going somewhat sluggishly because of production problems in the energy sector. So it's a quite simple story for our monetary policy operations. If I'm to summarize it, we look at the shape of inflation. It was like this and went down, like the rest of the world, like a hat, a sombrero. Then we have our monetary policy operations. If you look just at our policy rate, it went down and it stayed down. We didn't go, so it's like an L, an L. And then, but like Roger said, and in other places, the policy rates moved like this, went down, went up, and stayed up like this. So that, what shape is that? That's like a square root, raíz cuadrada. So how do we account for this difference in policies, but the similarity in inflation outlooks? Let me point to five factors that I think are important. The first thing is that in the Caribbean, in Trinidad and Tobago, monetary policy has many objectives. Inflation is just one of them. So that even our charter, you're talking about production, employment, credit, exchange rate, everything under the sun. It's a lot to be taken into account. And I think that's important because we will be looking at what's happening with our growth and our employment and so forth. In the rest of the Caribbean, so let's say Haiti. Haiti has a problem with security, and they have a lot of things going on, fiscal dominance and so forth, so that inflation is just one aspect. Important, but it's one aspect, and I think that's important to take into account. The second factor is inflation in the Caribbean, as I think in many countries in Latin America, is primarily externally determined. So that means that about 70% of our inflation comes from outside. So when we target monetary policy, we have to be careful, because if it is from outside. The closest inflation target in the Caribbean is Jamaica, which has an independent central bank. It changes its law recently. But the rest of the Caribbean has a lot of these other things going on. So inflation. And we did have inflation, as I said, going up and then coming down. What we do not find so far is that inflation has been internally generated. In other words, the wage price spiral has not yet taken hold, and we have, unless we have fiscal consolidation now that is increasing taxes and reducing subsidies and so forth, some of this has taken hold so far, but most of it is externally determined. The third factor is on interest rates, specifically matters of signaling, asymmetry, and distribution. Signaling. In our case, our policy rate is more of a signal to the commercial banks as to what to do, because we have huge excess liquidity, not deep capital markets, and so our rate is more of a signal to them. Now, but this signal has asymmetric responses. Why? The banks are quick to increase their interest rates when we signal via our policy rate that rates should go up, but very reluctant on the other direction. So we have to be very clear about that. If we are increasing, then it goes up. If we are decreasing, it may go down very slowly. The distributional impacts are important, because what we were concerned about is that interest rates would go up, the banks would make huge profits, but the man in the street, their mortgages would go up, and their costs would go up, and credit could be constrained. So this is something that we have to be careful of on the asymmetry side. Then the fourth factor refers to policy credibility, communications, and patience. What do I mean? Most countries, central banks in the world are doing, as I said, this shape. And so people are asking, well, why are you in the Caribbean or Trinidad and Tobago keeping your rates low? Now, we try to explain that this is our specific circumstance. We understand the panorama, but we are choosing it because of a different thing. But it is not always easy to explain that. Even the IMF got into the game. So our Article 4 consultation recently, there was a comment that Trinidad and Tobago should increase its rates. Now, of course, once that happens, then the journalists are asking us, what are you doing? The rating agencies are coming, what are you doing? And so forth. So we had to have communication that was very clean, precise, and simple. But we had to be very patient, because it is a long game, as it were. But that is something that on our front we had to deal with. In other countries of the Caribbean, some of them reduced their rates and they didn't increase it at all. Some countries didn't reduce their rates. The Bahamas never reduced their policy rate. They used other instruments like Belize, capital controls, and so forth. The Eastern Caribbean reduced their rate for the first time in 17 years. The final point is, I would say, now what? In a world where interest rates may be higher for longer, what do we do? We have to be careful. We have to look at situations very carefully. In our case, we did find, and we are finding now, that our negative interest differential has increased, because now we've inverted on short-term treasuries, our rates are lower than the US by about a couple hundred basis points. It is narrowing somewhat, but we have to be careful about that, because, as you know, this has implications for potential capital mobility, as well as exchange rate appreciation or depreciation, depending on how you look at it. So it's something that we have to be aware of. As I said, Jamaica is an inflation targeter, so they had increased their rate to some extent. Curacao is the other country that increased their rates closer to the Fed trajectory, but interestingly, their domestic rates had not moved that much, in other words, on mortgages and so forth. So that's the fifth point. So in conclusion, I think the central banks of the Caribbean have done their job, their assigned job, I think, rather successfully. They will continue to adjust. We continue to discuss among ourselves. So like last week, we met in Kingston, Jamaica to talk about monetary policies and so forth. The world is dynamic, and we will continue to adjust based on changing circumstances. So thank you very much.
Thank you very much, Governor Hiller, and also for the broader perspective of the Caribbean, not only Trinidad and Tobago. Ahora pasamos la palabra al gobernador Labat del Banco Central de Uruguay. Adelante, por favor.
Buenos días para todos, buena mañana para todos. Gracias al BID por la invitación, gracias por estar siempre promoviendo estos intercambios en cuestiones monetarias en la región que hacen muy bien. Así que bueno, es un placer para mí estar acá, compartir con mis colegas, mis saludos a Alvin y a Roger ahí y a Julio a través de la conexión virtual. Yo voy a hacer algunas reflexiones sobre el caso de Uruguay, pero primero me parecía importante en estas reflexiones hacer una reflexión sobre la historia de la región en esto.
Something about the region's history. This region, unfortunately, has a hard time coming up with good news. But when it comes to some issues, these issues, I do think we have some good things to report. Latin America has a long tradition of inflation. And we do have a large group of countries with positive experiences with inflation targeting in the last 20 or 30 years. I could mention some, but Don Julio is here, so Chile, Colombia, Brazil, Mexico, Costa Rica, Dominican Republic more recently. So I think that these countries' stories teaches us that even when there was a resurgence of inflation around the world, these countries were ready, and they were the first to respond by raising rates. So this may have been criticized, it may have been the subject of debates, but now that a few months have elapsed, or more than a year actually, Latin America has shown to have had robust systems in place, and results have been achieved. Inflation has abated, and most of the countries have been able to bring inflation back within the targeted range. So I think it's very important to say this, because the region does not always have good news. In this case, we do have a good story to tell. And we could even be a model for other regions. So now let me turn to Uruguay. I became governor at the beginning of 2020. And with a new board, we looked at how to set up a robust inflation regime, looking at other countries of the region as examples. We wanted to have a very strong system so that we could keep our inflation levels much lower than they had been. So we call this an approach that would enable us to have a quality currency. And this is somewhat unique because From the 60s to the 90s, inflation did see three-digit inflation levels. Then controls were introduced, but over the past 20 years, on average, inflation had been at 8%, maybe fluctuating from 6 to 8, going up to 10 in some cases, but I would say that 8% was the average. And even though this was better than the situation in past decades, it was not. It was an untenable situation for the country nonetheless. So we devised a plan which started with a diagnosis. We identified building credibility as our number one objective. So the biggest risk was failing to do that. And the program had 5 pillars. The first was to send very strong signals regarding our commitment. So first, it had to be part of the public discourse. We had to be extremely clear about this. And even though we were outside the target range, we had to start by adjusting the target range, making it clear that inflation was our key objective, that we didn't have a whole series of objectives. Inflation was our number one target. Secondly, we had to reintroduce an interest rate. At the time, we used monetary aggregates as instruments. We went back to having an interest rate. Back in 2020, in the midst of the pandemic and with interest rates that in real terms were still negative, we took steps to set up the instrument because we felt that it was better suited for us than any of the others we knew. The second pillar meant overhauling communication. This meant changing the frequency of policy committee meetings, also our engagement with economic analysts and other economic agents. We tried to have a much wider audience, and we were supported by many agencies and organizations in doing this. So we were able to improve our communications regarding monetary policy, and we were able to do so meeting the highest international standards. And then thirdly, and I will spend more time on this because I think it's important for the country and also for others, we insisted or strongly emphasized free floating. And we stressed that this was our objective, even though we would not refrain from intervening when that was necessary on the exchange market. And why? We believe that having a floating rate was essential for the sake of credibility. If economic agents did not believe us, and they did not believe in our inflation targeting regime, nor in the bank's commitment, if the central bank took action on the market, it could have been for good reasons, but those actions could be interpreted by market agents as pursuing other objectives or a series of objectives. So we stress the importance of not intervening because we wanted to make sure that our objective was having inflation targets. Roger has already spoken about Costa Rica and its actions, so we did not intervene at any point in time. Our last market intervention was in August 2021. So that for us was another pillar. And then the last pillar has to do with de-dollarization. Our economy is highly dollarized. 75% of our bank deposits are in dollars. 50% of our credit is in US dollars. Many of our economic transactions are also carried out in dollars. So our fifth pillar is to shift away from that to a certain extent, to de-dollarize our economy so that we can achieve our monetary policy objectives. Where do we stand at this point? As I said, we began working in 2020 by setting rates In mid-2021, we tightened our policy, started raising the rate. We went into a contractive phase, and we had a rate that went as high as 11.5% at the end of 2022. What that has meant is that we have achieved results that are very close to what we were seeking to achieve. Inflation is currently at 4.3%. Core inflation stands at 3.6%. And that for us is right in the middle of the range. The range is 3 to 6. In the future, we may be able to come down even further, but for Uruguay, which had a long-standing inflation track record, we are where we aim to be. We've been close to the middle of the range for 5 months now, and forecasts tell us that in 2023, we're going to stay close to the middle of the range, and the same will hold in 2024. So we may not be exactly where we wanted to be, but we're close. What is lacking? We're still working on building credibility. It's been hard, and this is something I stress when I speak publicly. I say that our inflation targeting regime is in the works. So in addition to seeing the direct monetary benefits of every decision we take, we need to understand that this will have an impact in our gradual building of credibility, brick by brick. So where do we still have work to do? Well, contrary to what happens in other countries of the region, we did achieve a level of inflation that is mid-range, but expectations are still outside the range. It's expected to be at 6.1%. That may be below our historical levels, so our credibility has improved, but it's still not where we want to be. I don't believe that we've achieved the credibility we seek. Exactly. Others don't believe us. But month to month, we see forecasts improve. This morning, for example, there was a corporate survey. Results were published. Indicators were much better, but we still have a way to go. And what have we done since April 2023? Roger mentioned this. In April 2023, we slowly started to lower the rate because inflation was within the range and expectations were that we're on track. We have been very cautious in doing so, understanding that there was some room to do that, but we did make it clear that we were moving cautiously. And at the last policy committee meeting, we did say that we foresaw a plateauing of the level soon. There won't be much room to cut the rate further until expectations change. So that's what I wanted to emphasize. I do feel that Uruguay is still building its regime. It's in the works. It's happening slowly, but we do need to forge ahead in building credibility. So that's it for me, and thank you very much. I look forward to having questions.
Thank you very much, President Laurenti. Very interesting presentation of the
Hablando, yo quería resaltar un poco, para resumir esta primera parte del panel, su primera reflexión. Conseguido en este último periodo inflacionario, que no hubiese sido lo mismo en otro momento de la historia, y es un reflejo de esa construcción de institucionalidad
that the region center banks had actually done their job. Commerce, the Governor Madrigal. You said that hopefully I'd ask you about the exchange rate, so let's begin with that. You had referred to what you said in Costa Rica on the volatility of the exchange rate, and you mentioned that in this last year you did a 15% appreciation. So help us understand a little bit why that exchange rate movement happened. And as you also mentioned, the IMF evaluation mentioned that it is done correctly. So let's help us understand that a little bit. Well, there are several elements to consider. First, that we entered into an appreciation phase after being in a depreciation phase. And it's part of the situation where the nominal exchange rate has been at the highest rate, which we said is not the correct comparison. Maybe the word nominal doesn't say much, but in the Costa Rican context, it never reached 700. It is very close to 700 colones, but the people make the comparison as though it had been at 700 for a long time. And that would be the starting point. The fact that Costa Rica was a country of a small open economy that caused the shock.
Which is, and during the pandemic, there was something which we call the zero season, where practically there was no tourists coming into the country at all. So we were actually in a situation where there were several shocks affecting the situation, and then the shock inverts. We had the war, or at least the war hasn't finished, but the shock stabilizes. The Russia-Ukraine war takes place, and some of the raw material prices start to return, and the fuel and tourism returns. Costa Rica is one of the countries that most benefits from the relocalization of companies from Asia towards the consumer and production markets. The direct investment, tourism, the reversion of the shocks, and the question of the containers that were at some point were about 11,000 per container, at about 12 or 1,300. All of these shocks inverted, and they changed the exchange rate situation of Costa Rica. And since we have decided to intervene in the least possible way in the market, that led to an excess of foreign currency, which appreciated the currency. So there are several things that we could say. Why the appreciation in Costa Rica? Well, there are factors that could be mentioned, like the liquidity, the financial. And Alonso is one of the ones who writes about this, and I hope that he will advertise the work that we've done regarding the productivity profits in Costa Rica. Costa Rica is, I would say, that one of the main factors of the appreciation are the productivity changes. One, Costa Rica, compared to the United States, has closed the gap faster. So there's something that I can't mention in Costa Rica because of the alleged independence between the central bank and the Ministry of Health, so I don't like to talk about that. But Costa Rica has something we haven't talked about, which is the fiscal part and the enormous fiscal effort that's been done in the last 4 or 5 years in Costa Rica, something which is not only done this administration, but since 2018, with a series of defects and so forth that could be improved, but that worked. The fiscal reform of the 18 is another thing that has helped the economy in Costa Rica. And two details, and I think I mentioned it yesterday at lunch. If we were to believe in the parity of the exchange rate, one would say that the inflation would, well, in other words, that the variation would make the difference in inflation. And I'd ask what country has a higher inflation, Costa Rica or United States? We have several episodes in which this has happened, and not just now.
And the last thing that I don't pay much attention to, but which is kind of curious, is that about 2 months ago in the Economy magazine, they asked what would be the nominal value of the real exchange rate, if it's possible, if it exists. So for Costa Rica, it was 528. And at the time when they did that, it was about 534, so more or less than 1% difference. So there are financial reasons, there are fundamental reasons of the real economy that have supported this appreciation of the currency in Costa Rica. Thank you very much. And taking advantage of something that was mentioned, since we have Novia Acosta, I want to congratulate you both for such good news for the country. The upside review of the economic situation, a positive review of the IMF, the upside review of the qualifiers, the credit qualifiers, and a successful issuance yesterday. So my congratulations for all those. I'd like to ask Governor Velarde now to tell us how he sees the monetary policy challenges in the current situation in Peru. As you mentioned, we're in the downside position of the economic cycle with an incipient recession. How do you see the challenge linked to the fact that in the United States the interest rates may remain high for some time? So how do you see those challenges in the country as well as external to manage the monetary policy in the future? Microphone, Don Julio. You have to turn your microphone off. You're muted. Oh, I'm sorry. So our objective, our only objective is that obviously has implicitly the inflation. When it's a demand shock, we react by dropping the interest rate. It doesn't necessarily has to do with the management of the banks that have a single target or those who have a different one. It's not the same in principle. What I wanted to mention is that the inflation, despite the fact that it's still dropping, is still very high. It's still above the average that we've had in the last 20 years. So though the interest rate had been dropping, we can't be that aggressive. And also, we have to consider what's going to happen next year. I mentioned the El Niño phenomena, which could affect not only Peru, but several countries in the region. And also the strong exchange rate pressure, which we're seeing. We're seeing in the volatility in the financial markets and the bonds that were recently issued. I don't think that there's a question between inflation and credit. I don't think that that's the fundamental factor. If we maintain high inflation, we have to be sure that the growth in the future is going to be less. In fact, to prematurely reduce, as Volcker said, may cause eventual effects. Volcker dropped the interest rate, and he had to increase them, which caused tremendous inflation later, probably being the most important central banker of the last 50 years. And the other thing, I would say that there is a problem with the potential growth and more than the contraction. It hasn't been a contraction, fiscal policy or the monetary policy contraction, because we've had it less than in other countries. It's more structural factors that have led to this. As I mentioned, things like the climate, the agricultural production, the fisheries dropped seriously because of the climate effects, and we hope to see a recovery next year from 2.8 to maybe 3%. Obviously, this is a process that can help in the monetary policy, but I think that the contribution would be relatively small. The problem is the potential growth has dropped. And that is a structural problem that we have to take care of and not respond necessarily with measures that are simply for this cycle. I think that that's basically what I would say. Thank you very much, Governor Velarde.
And so you mentioned that monetary policy in the Caribbean, or in particular in Trinidad, has several objectives. We've heard earlier Governor Labat talking about the benefits of moving to a framework of a single objectives, inflation targeting, and the gains in terms of results and credibility. Could you speak a little bit more about what you think are maybe the cost and benefits of having multiple objectives of monetary policy, and whether there is a cost in terms of credibility or communication, and how you mitigate that potential risk? Thank you.
Yes, thank you very much for that question. I think in the Caribbean, as well as in many other small countries, we start from a position of history where countries are developing, their central banks are developing, their policies, their governments, etc., and different things are allocated to different institutions. It so happens that the central banks now start with a position where they have a lot to be doing. I do think that the objectives need to be narrowed, but there is a capacity issue in many countries where the central banks are seen as the ones that have credibility, that can provide some stability, and that could provide some guidance. So this is where you have a larger role for central banks. As I mentioned, in the Caribbean, you have Jamaica being an inflation targeter, and I think Belize has started on that path also. But to do that, you have to have the laws set out properly. As I said before, we have...
Como dije antes, nosotros tenemos nuestras leyes.
Central bank.
Y si hay un banco...
The inflation targeting objective very narrow. I think it would be important, and I think I would advocate for it to be going in that direction. At the same time, we cannot be myopic because, like it or not, many individuals and actors look to central banks for more than just inflation. They look for financial stability, and I think you have to balance that. So all in all, I do believe that moving towards a single target would be important. The problem is that you may have a gap, a policy gap, where the fiscal authorities may not have all the structural tools to be able to deal with structural reforms that could develop the economy, so the central banks do come into play. So this is my take on this. Thank you.
Thank you very much. Gobernador Labat, la verdad es que no conocía muy bien el caso de Uruguay y
I wasn't really acquainted with the case of Uruguay, and I was very impressed by your report, how you went from a period of 15 or 20 years of inflation around 8%, to a period where you've got it down to closer to 4% at a time of global inflationary shock. And you talked about the institutional changes. My question for you is, what lessons did you learn from this process?
¿Y cuáles son los riesgos a futuro para, o cómo ve usted ese anclaje de...
What would you say about anchoring future inflation expectations? So could you tell us a bit more about something you hinted at in your remarks? What are the major challenges as part of that process? And what do you think is lacking to be able to anchor the inflation expectations in the current economy?
As I mentioned a while ago, actually, I told about the process, and I insist that this is a process that's building, it's evolving, and we still haven't reached the level. My main concern is that we continue in the same path and be able to arrive where we want to arrive. So, as an experience, I insist that our main issue, when you try to order the ideas and summarize, the challenge has been the lack of credibility. Lack of credibility, which was First, in the system itself. When we began this in 2020, the debate in the country was that the inflation target in Uruguay is not going to work for A, B, C, or D reasons. And it was also saying that we should implement it, but the mechanisms would not work adequately, as we see in the bibliography and channel. This is not going to work, and the other channel is not going to work. And thirdly, there was no credibility in the commitment either, in the commitment of the current board, where if it was going to be hard, it was going to be hard. So we implement this during the pandemic. And during the pandemic, we had an inflation, which at the time, of course, wasn't that high, but it was an inflation that never reached a double digit, but it was 9.9. And when we began the rate, we began at 4.5. So it was difficult to get credibility when we had such a low rate and we were saying that we wanted to go for inflation. So as the main learning, the lesson here, we've lost our speaker.
Sí, parece que le perdimos.
Cuando está el régimen en construcción.
When it was in construction, there was a challenge that Don Julio just mentioned, that trade-off between the inflation activities. Obviously, in the country, we also have people who say, no, let us have a little more inflation so the activity grows more. That happens to all of us. And I think that Don Julio explained it very clearly. We all know that we cannot resolve it that way. We've also had the currency appreciation debate, where clearly the Uruguayan price has appreciated considerably, and at some time during these years it was the currency that had appreciated the most. Now it's not as much. There are others who appreciated more than us. But all of these are questions that erode the credibility. And our attitude has been, and that's why I think the lesson, in each act from the highest to the lowest, always setting that commitment, because sometimes you have that temptation of intervening in the exchange markets and gain a little. But then we eroded the credibility that we were building. So we feel that, in my opinion, that's the best lesson learned and the one we have to build upon more, because the expectations are at 6 and a bit. We run the risk that maybe next year the pressures continue to be there. So we have to continue to insist. And sometimes I always tell this anecdote, because with some economic agents, when we talk about the communication change and so forth, we have a direct dialogue with many actors in society. And I always say something that, in fact, happened a couple of weeks ago with one of the actors, that about 2 years ago, he would say, this isn't going to work in Uruguay. Uruguay is different. It's not going to work. And 2 weeks ago, the discussion was the rate level. And he was saying that we were being excessively contractive. But the change of the debate, I value as absolutely positive change, because that same person who didn't believe in us then understood that now it works. And we may differ if we're going to be a little tighter or not, but I think that it is important for us as a lesson to learn that change in the culture of economic agents, which fortunately countries like Chile or Peru saw this 30 years ago, and they already appreciate that. Thank you. That was very clear. And I'd like to end this panel with 2 general questions for all 4 panelists. And you answer whichever one you want. You answer both or whatever. The first would be, in a situation where there are interest rates in higher interest rates in advanced countries, and maybe for longer periods, in a context of moderate growth, according to the predictions of the Monetary Fund, what is the response capacity your central banks would have? What would be the challenges? And the second question would be, What have we learned after the COVID crisis, after the inflationary shock, after the global crises? What did we think we knew and wasn't so? And what have we learned as something new? What have been the lessons learned from all this? I leave these two questions for all four of you, and maybe we'll follow the order we used at the beginning. So you answer whichever one you want, both or just one. Well, in answer to the first question, for a country with a high level of dollarization and external rates, if there is a deacceleration of the world growth in the developed world, as you mentioned, one would expect to have that idea of higher rates for a longer time will not remain. So those higher rates for a longer period of time is not going to be good. So it'll open space for the countries like ours that would be able to drop the rates. But that's a dream that doesn't exist. The central bank would have to deal once again with growth inflation. And I think that in the case of the Costa Rican Central Bank, at least, it would be inflation. And as for lessons learned, the importance of the institutions in the sociologic sense, as a rule to resolve conflicts. I think that, in my opinion, in the inflation goal, that's what we've all learned in many of our countries. Thank you very much. Thank you, Governor Velarde. Would you like to end with some thoughts? Yes, with pleasure. Well, first, I think that we are in a situation which was very similar that we had, where the 10-year bond rate was going to be 4, 5, or 5%, and the neutral rate in the United States has been 0.5. That's a situation that's obviously going to affect the neutral rates that we have as well, which have higher risk than United States. In the North American rate is higher, largely because the inflation and the inflationary shock or deflationary shock has been, like in the 90s, with a moderation, is no longer going to occur. Initially, we had one closer to 5%, can't be less than 2, as was the case after Lehman. And the growth is definitely going to be a bit slower. I'm sorry, that was very distorted. It was impossible to follow him. But I think that it might not affect us that much. And in answer, different to what Roger said, we have learned that the crises are different, that no one could have expected it would be we'd ever have a crisis like COVID with the lockdown, with a lockdown that we thought would last 2 weeks or 4 months. So what we learned from this is that the instruments and the ability to react are not crises we can ever foresee. People thought there could be a pandemic and that we could have a lockdown, but the flexibility is very important. We had it with Lehman, we had it with COVID, and it's sure to happen again in an unexpected way. Thank you very much. Thank you. Governor Hilaire. Lecciones.
It's for longer in a maybe slower growth context.
Yeah, I think the main lesson that we all could take from this is monetary policy and central banking is a lot of work. It won't get easier. I think we have much to do now. Things are getting very complicated. We have a situation where interest rates are high already, and we could be pushed into a global recession where we have an unholy balance to navigate with high interest rates and still trying to deal with inflation and slow growth. I think our situation, our role will not get easier. We have to deal with climate change. We have to deal with artificial intelligence. We have to deal with a whole set of things. We have to deal with markets that are very jittery. And I think one of the things that central banks need to be very aware of is not to be reacting like markets to every single bit of news. Sometimes you have to be patient and let things ride a little while looking at things in the long term. So and I enjoy the experiences, and I think the other main lesson is that we need to continue to learn from each other, because from each of our experiences, we get something unique. So that's quite important. Thank you.
Thank you very much. Gobernador Lavant, sus reflexiones finales. Gracias.
No pude escuchar a mi colega de Trinidad y Tobago ni la pregunta, pero sí había escuchado las preguntas originalmente. Supongo que me estaban pasando la palabra, así que
sí. ¿Me escucha?
A ver, claramente tenemos un escenario más complejo en lo global.
In general, complex because of the way things are today. Thinking of a scenario with more rates, with slower growth, but with a number of uncertainties, geopolitics, wars, and there doesn't seem to be an immediate solution for these. So we're at a very difficult moment. And I wouldn't go into that as much as say that what we have to do is to be careful in our countries not to want to resolve a problem that we get from outside with a bad tool. So let's not ask the monetary policy to resolve all these problems that are coming from outside. So, as I said before, the evaluation of the monetary institutions in the region as a whole, I think is important in these scenarios, and we have to preserve and be very careful to protect these institutions and not misuse what we've done for so many years just for a question of 15 days. As a lesson learned from all this process, and here I'm going to go to the pandemic, at least in my case, it's helped us work to think of the short and long term at the same time. That often we see it as a contradiction. Either we plan for 5 years, but we're in the middle of a fire, and then we think of the fire alone. So when we were during the pandemic, we were always saying the same thing. Today we help. In the particular case of the monetary policy, we make it expansive, but at the same time, we're building the institutions that will later help us drop the inflation as soon as the pandemic ends. So I think that that's all very important, that our countries get used to not thinking only in the short term, but thinking in both ways, to respond to the short term because it's important. You have to protect the lives of many citizens, and every morning think of all the citizens short term, but you have to build the institutions and think of the long term. Thank you very much. Thank you very much. And thank you to all 4 of you for sharing your experiences, your lessons learned. And I think that, as Governor Hilaire said, we learn from each other as well by sharing experiences amongst us. And before we end this session, I would also like to greet the governor from the Central Bank of Guatemala, who's with us here in the room today, Governor Ritchie. Good morning to you, and thank you for joining us today. I know that a few months ago we were here with you, up here with us, and hopefully you may be able to join us in future meetings like this. I didn't want to end before welcoming you, Governor Ritchie. And with no further ado, thank you all very much. Thanks to our public, the members of the network. This has been a very useful conversation. I hope you enjoyed it. And we encourage you to continue with us for the next few days. Thank you all for being here. Good day.
A continuación, los invitamos a un